Hello, everybody. It is time we are talking about a trading company. A trading company is a commercial business entity that buys and sells various goods. These companies are involved in various industries and are typically responsible for all supply chain stages, including processing, distribution, and sales. Trading companies can specialize in specific business fields or operate areas and machinery across multiple industries, and they often play a crucial role in connecting producers and consumers in the global marketplace. In the context of international trade, trading companies are often involved in commerce with foreign nations or in overseas territories, and they may handle a diverse array of products from consumers' goods to industrial materials. And then, what does a trading company do? Trading companies are synonymous with many operations, including procurement, quality assurance, and logistical coordination. There are the negotiators working out prices, terms, and conditions with manufacturers and retailers, striving for a win win situation for every stakeholder involved. Moreover, these companies are adept at navigating international trade's legal and procedural labyrinth, which encompasses customs regulations, international laws, and trade tariffs. Their expertise in these areas ensures a streamlined transition of goods across borders, which benefits suppliers and buyers alike. And then we move to the types of trading companies. There are several types of trading companies, each tailored to specific business models and market needs. The first types, general trading companies. These companies deal with a wide variety of goods across multiple industries, catering to diverse markets. And then the second, e-commerce trading companies operate online platform to sell products directly to consumers or other businesses. And then the third types, specialized trading companies focused on specific industries such as electronics, textiles, or pharmaceutical. And then fourth, import export trading companies. These entities specialize in international trade, handling customs, shipping, and foreign market compliance. And then we move to the core functions of trading companies. The main jobs of a trading company are: the first, finding products from makers and suppliers worldwide. And the second, offering market insights and advice to clients. Third, handling inventory and logistics for on-time delivery. And fourth, helping with transactions between buyers and sellers, reducing payment risk. And then we move to the next characteristic of a trading company. There are several characteristics of trading companies that differentiate them from non-trading companies. The first, its main activities are buying, selling, operating expenses, storage, and stock maintenance. And the second characteristic, accounting activity, which means the company uses its merchandise inventory account, which includes its PP calculations, balance sheets, and profit and loss statements. The third, calculation of total profit, the benchmark of which is the difference between the total sales proceeds and the total purchase price and operational costs. And then fourth, do not carry out production processes that change the value or form of a good. And then how to start a trading company. Starting a trading company requires careful planning and execution. There's a step-by-step guide. Step 1. Identify your niche. Determine the industry or product categories you want to focus on. Analyze market demand, competition, and your expertise. And then the second, create a business plan. Develop a detailed business plan outlining your goods and goals, target market, sourcing strategies, and financial projections. The third, register your company. Choose a business structure and complete the registration process with the relevant authorities. And then step 4, obtain necessary licenses. Depending on your location and the goals of your trade, secure import or export permits and any industry-specific license. And then fifth, build a network. Establish relationships with suppliers, manufacturers, and distributors. Networking is key to sourcing high-quality products and finding buyers. 6. Set up logistics. Organize warehousing, shipping, and inventory management systems to streamline operations. And then 7th, launch and market your business. Create a website, establish a presence on a commerce platform, and market your company to attract clients and grow your customer base. And then the key requirements for a trading company in Indonesia. Before you start your trading business, it is important to understand the fundamental requirements for establishing a trading company, especially in Indonesia. The first, legal entity. Foreign investors can set up a PT-PME or perseroan terbatas penanaman modal asing, which is a foreign-owned limited liability company. Keep in mind that whether the company has 1% or 100% foreign ownerships, it is legally referred to as a PTPME. For local owners, it is advisable to register a PT company. And then the second, business address. You must provide a valid business address. If your office is in Jakarta, then it is mandatory to have this address in a commercial area. Outside Jakarta, it can be any area, but the building must not be a residential house. And the third, minimum capital. The minimum paid up capital requirement for a foreign owned trading company is 10 billion rupiahs per business activity diversification code. For a local company, the minimum capital requirement starts from 51 million rupiahs depending on the site of operations. I think it is enough for this session. Thanks for watching, and don't forget, give this channel with your like, comment, subscribe, and share. Thank you.